Greetings, members, one and all of the Salivation Nation. Boy, we saw quite a drop today in gold and silver prices. This article comes to us from CNBC. Gold falls on the dollar. Stocks on track for their worst week since August, and it has been quite a ride for gold and silver lately, and really unexpected. I was thinking that gold and silver were going to continue to either go up from here or level out for a while. But it looks like gold prices fell 1% to its lowest level since the end of January on Friday. It was headed for its biggest weekly fall in 6.5 months as the dollar recovered and global stock advances spurred risk-taking. Spot gold was $1295.99. That's $1,295.99 an ounce at 2:04 p.m. Eastern Time, having fallen below the key $1,300 support level for the first time since January 28th. It is down about 2% so far this week, and it just happens to be after I made a purchase of gold. Go figure. It's the biggest fall since the week ending August the 17th. U.S. gold futures settled at $16.90 lower to $12.9920. The U.S. dollar index and 2-year Treasury yields have moved up over the past couple of days, and these factors have prompted people to take some profits in gold, said Bart Malik, head of commodity strategies at TD Securities in Toronto. We're also seeing a continued reaction to Federal Reserve statements where hikes are still on the menu, given the data seems to be fairly strong in the United States. And so that's going to be a factor that would certainly come into play. But I would hardly think that would be the only thing that would make these prices go down. Better than expected U.S. gross domestic product data on Thursday boosted Treasury yields, making non-yielding bullion less attractive. The data also helped boost the dollar to a 10-week high against the Japanese yen earlier this session. Higher global stocks also weighed on gold, analysts said. Better sentiment on the stock markets and a reluctance by the physical gold investors are weighing in on its price, Commerce Bank analysts said. Holding on to the SPDR Gold Trust, the world's largest gold-backed exchange-traded fund, on Thursday fell to the lowest level since late December. Palladium climbed 0.3% to $1547.86 an ounce. Wow. The metal hit an all-time peak of $1,565.09 this week and is headed for a fourth consecutive week of gains. The threat of a possible strike in South African mines is keeping the prices high, said Miguel Perez Santella, Vice President of Heraeus Metal Management in New York. Even though it has been forestalled by the Court of South Africa, the threat still exists. And until the threat is taken off the table, we will see both platinum and palladium prices still strong. Platinum dipped 1.17% to $859.81 an ounce, but is on track for a third straight weekly gain. You remember when platinum was trading for under $800 not too long ago. So these strikes certainly are having an effect. Spot silver fell 2.48% to $15.21 after hitting a $15.18 low last seen on January the 22nd. The metal was down 4% so far this week, its biggest decline since the week of February 2nd, 2018. So let's take a look here at the prices for gold, silver, platinum, and palladium. And we can see that all the metals fell except for palladium. Palladium is up $2.37, and platinum is still up pretty substantially from lows that we saw before, under $800. Look at that. But it's down today $20. Quite a hit. Percentage-wise, it's taken the largest hit of all the metals today, but silver is down 38 cents to $15.24, and gold is below that floor of $1,300. You may remember a video I posted earlier talking about how there was support levels. The floors for gold were, the high floor was at $1,330 and then $1,300. It just broke through both of those. So now it's under $1,300. Now, as to how long it will stay under this price, going into the weekend and coming into Sunday night at 6 Eastern time, when the Asian markets open is anybody's guess. We shall see. My guess is it probably will bounce back up above that $1,300 support point looking into next week, but I could be wrong. But I think this is a level that if it stays below this number for a time, a couple of days, it may be a little tougher for it to get back over that $1,300 mark. Silver, it's been a very interesting and volatile creature. I see two floors here, one of 15, which I think is a harder one to get below, considering where we've gone and how volatile silver's been and how undervalued it's been for so long. Moving ahead, $16 is the second floor. And we've gotten above that, and I think we'll get above that again still as the year progresses along here. But I think it could bounce anywhere between $15 and $16 throughout the year. Make no mistake, though, silver is a metal to watch, and I think that in time it's going to increase, and I believe that we're going to see that the ratio between gold and silver tighten at some point. But it may take some sort of either crisis or recession or something like that to cause it to tighten up some. We'll see how it all plays out. It is fascinating to see where these metals go. My view is it's a good time when the prices go low. It's a good time to buy. However, don't be like me and buy when they're high and then think, well, they're low, I should buy some more. I'm not going to do it. I will not buy while the prices are low when I can't afford to do so. This is the time to be disciplined. Sometimes it's good not to buy when the prices are low because you don't have the money to do so. And that's the case where I'm at right now. I have some goals that I want to be made. Now I've met this year and I've got my heart set on them in terms of gold and acquisitions especially. But right now, I've got to be able to tighten the belt fiscally because I'm going to do something that the government or most governments around the world don't do, and that's exercise fiscal discipline. That's right. That's for sure, because, it's at times like these when you see the temptation that comes in mind, when you see $20 less gold or 40 cents less silver, it seems like it might be a good time to go ahead and pull the trigger. And if you can do so and take advantage of these low spot prices, by all means do it. But I think it's times like these where we're exercising fiscal discipline if you need to, or if you should, is the time to really take heed. But nonetheless, there it is. That's where we stand here at the end of this week with gold and silver prices and where things are going, especially considering what's going on around the world and with the Federal Reserve and what's happening with strikes and unions with palladium and platinum mining, paper holdings, gold and silver futures and the like. We will press on here. We will continue and understand. Here's something else to think about too. Think about the gold and silver that you do have in your coffers. Each one of us accumulates a little bit more at a time. No matter what your percentage of each metal you do hold, what you have is empowering. And so it's at times like these when we have to be thankful for what we have, even if the price is lower, because we know that in the end, these metals are what protects us from economic instability. And it provides us an example to us to be our own reserve banks. And so that's what we will do. And that's how we will proceed from here, accumulating these metals, no matter what the price does. But I think that through a long period of time in history, if you look at charts, both these metals, gold and silver, both act as that ultimate protection and that hedge, and have served well to preserve their value against fiat currencies around the world. And that's what they're here for. So we'll continue to press on and see what the next week holds with the prices for gold and silver. Platinum and palladium are separate animals because they are metals that I consider to be more fringe precious metals, but are possible metals to purchase for investment purposes, considering how they are used and how rare they are and how volatile they can be in the marketplace. Palladium is king right now of these four metals that you see before you, other than rhodium. Rhodium is definitely the higher priced one, but is not traded nearly as often and is much rarer than all these metals for sure. But in the end, we diversify a little bit, we accumulate, and we enjoy the accumulation and the acquisitions that we get with these metals. Post your thoughts below. I'd like to extend a multitude of gratitude to y'all for watching and encourage you to please rate, comment, and subscribe.